body is a decent enough size body where I would expect a bullish day to take out at least 50%. You can tell by the wick that it tried, but it couldn't quite do it. So it settled down a little bit. Now, what does that mean? Well, not really a whole lot, but if I was to look just at that chart, just at those two candle bodies, I would presume more bearish view, a little more of a bearish sentiment than I would a bullish. But of course, that's only speculative. It's certainly not 100% fact. With the way things have been going lately, who knows what's going to happen. Nonetheless, that's where we are with the S&P. If I want to take a look at the VIX, and I like to do this once a week or so, the VIX tried coming down a little bit here off these two highs, and I thought maybe it would come back down to some of these lows again, but it didn't quite make it down. So it started heading up a little bit, and interesting that this is increasing fear. Now, it's interesting that these last, let me get rid of the congestion, that these last bodies here, 4 bodies, in comparison to these 4 bodies, that maybe it should have come down a little bit, because if I look at the previous, if I look at these first 2 bodies of the 4, why, those were bullish bodies, so we should have had a downward movement, especially on that body right there. But yet with that bullish body, there should have been at least a little sideways movement, but the fear moved up. So that was indication that it would come down on this day, and it did. Well, now we've got just a little bit of a sideways movement on the VIX, which would be these 2 days, and I guess reasonably so. So the VIX is saying, hey, the fear is moving up a little bit. Well, if the fear is moving up, then perhaps the market should come down. If the fear does go up, the market will come down. But these bodies are so small that it doesn't give that much of a bearish sentiment. So we'll wait and see what happens. Now, what I want to do as well, and we've been doing this, is take a look at some possible trades here. So let's start with Apple. Now, I'm going to let you know, and I mentioned this last time, that this is about the 3rd time I've done it, but it will be the last time. Now, what I'm going to do for the Trade Alert subscribers is I'm going to start making this a constant thing on a monthly basis, and this video now will be posted on the Trade Alert page. So for those of you that are Trade Alert subscribers, I'm going to try to get about 10 to 20 of these trades out per month. 10 to 20. Now that's up and besides the regular trade alerts. So the trade alerts is something that we actually place in our account, and these little individual candidates, we don't trade. We may here and there, but there's so many of them that I'm not going to trade them all. I'm trying to give a lot of suggestions, and you can pick and choose what fits your trading style, your level of aggression, your level of conservativeness. Yet at that same time, I'm not telling you to do these trades. I'm not even advising you, but I would follow them for sake of education. All right, so Apple. Apple broke out, and Apple had a 100% test. Had a 100% test. So if Apple does break above the high tomorrow, and if it continues above this 101.60, then that would be a bullish play. What could we do bullishly? I'd buy a call. Could we place a bull put spread underneath these levels? We sure could. So that's where a bull put spread would go. Now, I like the idea of the call better on Apple simply because of the pricing of the contracts. And I would do one of two things. Tomorrow's Thursday. I would probably take this Friday's expiration of the 11th. This Friday's expiration. And you might be thinking, oh, wait a minute here. I thought we were told you got to go at least 2 weeks out. Yeah, well, at the beginning levels of education, yes. Now, if I jumped into this tomorrow, Thursday, morning, and I took the 11th expiration, I more than likely will not hold over Thursday into Friday. I more than likely would not do that. I would try to get out when I am happy with the profit on Thursday, or at least at the end of Thursday. Now, why I would get in tomorrow is because tomorrow, Thursday, we've only got 2 days left until expiration, Friday, and that means that these options are going to be very cheap because there's not going to be much time value in those options. But what I'm not going to do, more than likely, is hold overnight on Thursday, because from the close of Thursday to the open on Friday, there will be 17.5 hours of time decay. And then I've only got 6.5 hours left on Friday until the close on Friday. So I've got 17.5 hours from the close of Thursday to the open of Friday, and only 24 hours left from the close of Thursday to the close of Friday. So that means a lot of time has got to decay away. Now, the only way I would hold in overnight from Thursday to Friday morning is if I had maybe only 10 cents of time left in my option. And if I felt that it would continue to go up, and I'd have to be willing to get rid of or lose my time value holding from Thursday close to Friday open. And all I'd have to do is gain 10 cents of intrinsic value on a call to make up for the loss of 10 cents of time. You might have to think that through. All right, now could a person hold or take a position with the following Friday's expiration and hold on to this trade to see if it makes it all the way up here? Sure could. Sure could. So either or. Now again, I like the idea of the call because I'll probably only have about 3 cents between the bid by ask and a very cheap option if I choose this Friday's expiration. So these are the types of things that we do in our intraday trading. All right, so let me go to the next one here. And before I move to the next one, I forgot to talk about the stop. I would probably throw a stop in here right underneath, maybe right underneath the support level. I'd probably keep it pretty tight. Now that's about $1 move. So with a tight stop like that, what I would want that if I did get into the trade, now think about this, if I get into the trade because it pushes up and I've only got a 3 cent spread, the stock has only got to move 3 cents to clear that spread. Don't forget, we're always in the hole, the amount of the spread, as soon as we take the position on. So what if the stock only went up 10 cents? And then started to turn down? I could jump out of the trade right away and make 7 cents. I have to give the 3 cents back. Right? So I really don't want it to go down and take out a stop at a whole $1 down. I'd prefer not to do that. But if the market is bullish tomorrow, so the only time I'm going to take this on, that it not only has to take out the 101.60, but I have to have positive futures in the morning. If I do not have positive futures in the morning, I'm not going to do the trade. So it has to, the trade would only be taken if this happens. Buy the call if. Always got to think of that word if. All right, so let's go ahead and take a look at the next trade. I was looking at Facebook. Facebook has pretty much the same thing going on here, where I've got this strong angle of attack. So I've got the strong angle. So we got to close above this magenta line here, this trend line. So if Facebook would trade up above that 107, this is another thing I would go ahead and do the same with Facebook as I did with Apple. Try to buy this Friday's call option, or again could go into the following week and hopes that it surpasses this level. And I think this 109.95 resistance level could be a weak support level, or excuse me, resistance level, but it is there and it cannot be ignored. So that's about $1 or $2.30 up. And again, Facebook options, we're talking in the low $1 range, $1.10, $1.20 it could cost tomorrow to take on a call option. And I would follow, especially when we get into close to expiration. We've got to make sure we got a good delta, 70 or plus, 72, 74 delta. Now, we could do a bull push spread, but the bull push spread would have to be placed under here. But you could not do it for this Friday. There would not be enough money. I don't think I like that at this point, but I do like taking on the call if it surpasses the 107.60. And again, would have to have positive futures. Otherwise, no go. Now, if I did take this on, my stop would be right underneath the open. Right underneath that open. And let's say about, I got to give it a little wiggle room. So I'd place it right there. And that's about $1.20 down. Alright, so that's what I would do with that. Alright, now don't forget, that's two bullish trades. So I am making a list of what we have bearishly and what we have bullishly. So far, this is bullish. And another one I looked at was McDonald's. So if McDonald's breaks half of that wick around 119.90, and my thinking on that is we're kind of breaking above these sideways moving averages, and the moving averages are just starting to take a little bit of an angle. Right now, these moving averages, they don't mean a darn thing because they're going sideways. But what we have here is a little bit of a box.